All right, Tata Steel is also in focus after Moody's upgraded the stock to investment grade with Baa3 issuer rating. My colleague Parikshit Luthra spoke to Tata Steel's MD and CEO TV Narendran and started by asking about the outlook for steel prices moving forward. Listen in to what he had to say.
It's a bit of a mixed bag just now. In India, things look strong because the demand is strong across sectors. And Indian steel producers, even without exporting much, are fully utilized. The capacity is fully utilized selling in the domestic market. So I expect prices to continue to be a bit strong. Second thing which is helping prices or pushing up prices is the input costs are going up. Coal prices have gone up about $70 in the last few weeks. Iron ore is still quite strong. So a lot of input costs are going up, which is putting pressure on prices. On the other side, internationally, things are still a bit fragile because China has not yet come out strongly post-COVID. Europe is still a bit fragile. US is looking quite resilient. So let's see how international markets turn out to be. But I expect H2 to be better than H1.
The resolution that you have arrived at with the UK government, how does this help Tata Steel? What next? What are the next steps from here?
So I think it addresses the issue that we've been dealing with for a long time, which is the lack of competitiveness in our UK operation because of legacy issues. By choosing a new process route, which is leveraging the steel scrap which is available in the UK, we are basically changing the competitive position of Tata Steel in UK, and that will make sure that it's a sustainable business, not just from a CO2 point of view, but from a financial point of view. And I think the UK government is supportive because they see it as an important step to reduce the carbon footprint of industry in UK, and Tata Steel is a very important part of the industrial value chain in the UK.
So how would you see this financial support that is coming from the UK government? How will this play out?
I think it's something which is happening across Europe. If you look at European governments, they are supporting steel industries to make this transition because honestly, the cash flows of the industry in Europe don't support the transition to be undertaken by the industry by themselves. So whether it's Germany, Spain, and now UK, you see multiple countries helping the industry transition. So part of the funding is obviously from the company, part of the funding is from the government, and part of the funding in some sense comes from customers who are willing to pay more for green steel.
And finally, what are the growth drivers that you see for this year, for the remaining part of this fiscal?
So India, the growth is strong. I think steel consumption is currently growing at about 10% a year, which is very good, which is the way it should be. I mean, normally steel consumption in developing countries have to grow faster than the GDP growth rate. So I think India is seeing a period which is like that, and not surprising because of the fact that there's a lot of focus on infrastructure.
All right, so that's the word coming in from Tata Steel. On that note, we'll slip into a short breather on business.